Welcome back to the channel, financial enthusiasts. Today, we're diving deep into the tech giant that's been making waves in the stock market, NVIDIA Corporation, ticker symbol NVIDIA. Buckle up because we're about to break down some mind-blowing metrics that you definitely want to know about. Let's get started. First up, let's talk about the P/E ratios. NVIDIA's price-to-earnings ratio trailing 12 months is sitting at a hefty 52.75. Over the last 5 years, their average P/E ratio has been even higher at 60.34. This means investors have been willing to pay a premium for NVIDIA's earnings, and for good reason. Looking forward, the forward P/E ratio is expected to drop to 28.36, suggesting that analysts are predicting even more robust earnings growth. Now, check this out: the P/G ratio, which factors in earnings growth, is at 1.39. Anything under 1 is considered excellent, but NVIDIA's 1.39 still indicates solid growth at a reasonable price. Insider ownership is at 3.97%, which shows that the people running the company have their skin in the game. Always a good sign. Hold on to your seats, because NVIDIA's return on equity is an astronomical 115.66%. That means for every dollar of shareholders' equity, NVIDIA generated $1.15 in profit. Their return on assets is also impressive at 70.1%, and return on invested capital comes in at 61.7%. These numbers are off the charts, and show just how efficiently NVIDIA is using its resources. When it comes to earnings, NVIDIA has been on a roll. Their earnings per share, or EPS, is a solid $18, and they are projected to grow by 37.9% over the next 5 years. Over the past decade, their EPS has seen a compound annual growth rate of 48.96%. That's some serious growth, folks. And it's not just earnings. Free cash flow per share has also seen a stellar rise, with a compound annual growth rate of 46.07% over the last decade. This means NVIDIA has been generating more and more cash that they can use to reinvest in the business, pay down debt, or return to shareholders. Speaking of returns to shareholders, let's talk about dividends. NVIDIA's dividend yield might look tiny at 0.04%, but they've grown their dividend at a compound annual growth rate of 7.18% over the last 10 years. Plus, after announcing yesterday's 10:1 stock split in June, they also announced a whopping 150% dividend growth. Talk about rewarding investors. NVIDIA's operating margin is an impressive 54.12%, and their profit margin is close behind at 53.4%. These margins are incredibly high and reflect the company's efficient operations and strong pricing power. The evolution of NVIDIA's revenue and earnings over the last 8 years has been nothing short of explosive, especially in the last year led by artificial intelligence. Their market performance has outshone the VO with a higher total return over the past 5 years. If you've been riding the NVIDIA wave, you're probably smiling right now. And don't worry about debt. NVIDIA's debt-to-EBITDA ratio is a very manageable 0.31, and their debt-to-free cash flow ratio is an even better 0.28. This means they have plenty of cash flow to cover their debt obligations. Now, let's talk about stock performance. Over the last 52 weeks, NVIDIA's average price return has been a staggering 204.56%. This stock has been on fire. With a market cap of $2.35 trillion, NVIDIA is a true titan in the tech world. Finally, analysts predict that in the next 12 months, the stock price will hit $1,042.20, up from the current $949.50. That's a potential upside of 9.76%. However, my fair value estimate for NVIDIA is $844.25, which suggests that the stock might be a bit overvalued at the moment. So there you have it. NVIDIA Corporation is a powerhouse with amazing growth metrics, strong financials, and impressive stock performance. Whether you're already an investor or thinking about becoming one, these numbers are definitely worth your attention. Don't forget to like, subscribe, and hit that bell icon for more deep dives into the world of stocks. See you in the next video.